Y'all ready for this? Let's go.
Welcome back to the Ben James Smith podcast, where we explore capital, governance, investor psychology, and the principles behind building enduring investment platforms. Today's episode is about something that separates institutions from opportunists. It separates longevity from volatility. It separates builders from gamblers. Today we're talking about capital discipline. More specifically, why the best investors in the world say no far more often than they say yes. Segment 1, the illusion of activity. In most markets, activity is confused with progress. Deals flowing, announcements made, deployments accelerating, momentum building. It feels productive, it looks impressive. But here's the uncomfortable truth. Activity is not the same as discipline. In fact, the more opportunity a platform sees, the more disciplined it must become, because opportunity is abundant, but high-quality opportunity is rare. The difference between a lasting platform and a short-lived one often comes down to a single behavior, the ability to decline. Segment 2, the hidden cost of yes. Every time capital says yes to an opportunity, it implicitly says no to every other opportunity that could have been pursued. Capital is finite, time is finite, focus is finite. Saying yes without discipline is expensive, not just financially, strategically. Sophisticated investors understand something many new managers miss. It is not the number of investments that defines performance, it is the quality of selection. And selection is fundamentally about rejection. The best investment committees spend more time debating why something should not proceed than celebrating why it should. That is not pessimism, it is stewardship. Segment 3, discipline signals maturity. When allocators evaluate emerging platforms, they look for subtle signals. One of the most powerful signals is selectivity. A manager who appears eager to deploy at all times is perceived differently from a manager who appears patient. Patience communicates confidence. Urgency can communicate pressure. Capital discipline is a signal that you are not dependent on activity to justify existence, and it suggests you are building something that can afford to wait. And capital trusts platforms that can wait. Segment 4, the power of pacing. Let's talk about pacing. In investment management, pacing is rarely discussed publicly, yet internally it is everything. Deploy too slowly and returns dilute. Deploy too quickly and standards slip. The most resilient platforms master rhythm. They understand that not every quarter demands expansion. Not every cycle demands aggression. Not every headline demands reaction. They pace capital according to opportunity quality, not emotional climate. This is extraordinarily difficult to do because markets are emotional ecosystems, but disciplined capital operates from principle, not pressure. Segment 5, the psychology of saying no. Why is saying no so hard? Because yes feels productive. Yes builds pipeline. Yes creates revenue. Yes generates visibility. No feels invisible. But no protects standards, and standards protect longevity. There is a deeper psychological dimension here. Undisciplined deployment is often driven by fear. Fear of missing out, fear of inactivity, fear of losing relevance. Disciplined deployment is driven by clarity, clarity of mandate, clarity of return profile, clarity of risk appetite. Fear accelerates, clarity filters, and filtering is the foundation of institutional credibility. Segment 6, scarcity creates signal. The most sophisticated investors understand this principle instinctively. Scarcity creates signal. When a platform only pursues a narrow subset of opportunities, it communicates conviction, it communicates expertise, it communicates focus. Breadth often dilutes perception. Selectivity strengthens it. The managers who endure are often those who understand their lane and refuse to drift beyond it, even when the market tempts them, especially when the market tempts them. Segment 7, what capital discipline protects. Capital discipline protects more than returns. It protects culture, it protects reputation, it protects investor trust, because nothing erodes trust faster than inconsistency. When investors observe a platform deviating from its stated framework, confidence erodes quietly, and confidence, once eroded, is extraordinarily difficult to rebuild. Disciplined platforms rarely need to explain themselves. Their behavior remains aligned with their philosophy. Consistency compounds, so does inconsistency. Segment 8, saying no, is strategic positioning. Here's something most founders discover too late. Every no shapes brand positioning. If you say yes to everything, you stand for nothing, but if you repeatedly say no to misaligned opportunities, over time the market understands what you represent. Clarity attracts aligned capital, ambiguity attracts transactional capital, and transactional capital rarely stays through cycles. Segment 9, the long game. Capital discipline is not about short-term optimization. It is about long-term survivability. The platforms that endure across cycles are not those that expanded fastest, but those that preserve standards. They resisted drift. They resisted ego-driven expansion. They resisted growth for the sake of growth, because growth without discipline creates fragility, and fragility revealed itself during contraction. Enduring platforms are structured to withstand contraction, not just expansion. Segment 10, a reflection for builders. If you are building an investment platform, ask yourself this: are you measuring success by capital deployed or by capital protected? Because sophisticated investors are not impressed by volume, they are impressed by judgment. And judgment is most visible when you decline. The most powerful word in institutional investing is not scale, it is select. Let me leave you with something to consider. In a world obsessed with acceleration, restraint becomes rare, and rare behaviors attract rare capital. The managers who say no with clarity often become the managers institutions trust with scale, because saying no is not a rejection of opportunity, it is a declaration of standards. Thank you for joining me for this episode of the Ben James Smith podcast. If this series resonates with you, subscribe and follow. In the episodes ahead, we'll continue unpacking the philosophies that underpin enduring investment platforms. Not how to chase capital, but how to build something worthy of it. Until next time, capital flows to opportunity, but it stays where discipline lives. Thank you for listening. Speak soon.